Welcome back, 7:45 right now. So with the Federal Reserve raising interest rates, rising inflation in the U.S., and a war in Europe, the markets have had a lot to digest this year. Our 9 News financial advisor Bruce Allen from Bruce G. Allen Investments joins us in the studio this morning to talk about the ups and downs of the stock market. There have been many ups and downs. So what are the most dramatic moves? We're coming up to the end of the quarter. What are the most dramatic moves so far?
The big move we saw this quarter was not in the stock or bond markets, it was in the commodities markets. And this has been in the news today. The price of oil has risen dramatically. We saw oil start the year around $75 a barrel, Gary, and it's gone up to over $103, and at one point in the quarter was over $130 a barrel briefly. The commodity markets are up over 27%, and that's been led by the rising price of oil and natural gas, which everybody's feeling.
Yep, and are going to for a while, it sounds like. So the Federal Reserve's trying to rein in all of this, and they're raising interest rates. First of all, how's that going to affect people, and how's that going to affect the bond market, which is kind of usually the safe haven, right?
Yeah, what we've seen so far this year was that the 10-year Treasury, which started the year at about 151, has risen to a little over 2.33% this morning. That bond is the bond that sets interest rates for mortgages and a lot of other loans. And we've seen rising mortgage prices and so forth. With the interest rates rising, the value of existing bonds have declined over 6%. That's the biggest decline in a quarter for bonds since the early 80s. So it's a big shock to a lot of investors, and we're watching how that's going to unfold.
Given that, how has the stock market overall done? I mean, we get the impression it's not doing well, but...
Now, the ironic thing is the bond market's done worse than the stock market. And I'm not sure that I've said that maybe ever in a quarter, but it's pretty rare. The S&P 500 is down about 3%. What we saw this year so far is that the big tech-heavy growth stocks, they have been taking the brunt of the beating. And at one point, the Russell 1000 Growth Index was down nearly 20%. It's finishing out, it looks like we're going to be down around 7.5% for the quarter. The dividend-paying blue chips, the Russell 1000 Value Index, is actually up this year. So we've seen a real disparity between companies that pay dividends and have cheap values. They've actually been holding their values pretty well, whereas the more expensive tech stocks, which have been the darlings of the market for the last couple of years, have taken the hit. They've taken it on the chin. So those companies are really, we're seeing a divergence of which companies are holding up in this market and which companies aren't.
So given all this craziness and the fact that you can't really go to the bond market right now, seemingly, to be safe, what should investors do?
Well, I think there's two things. The biggest thing to watch for, Gary, is what's happening in the bond market. Actually, on Tuesday, we saw the 2-year Treasury bond temporarily pay more of an interest rate than what investors get on a 10-year Treasury bond. That's unusual. It's called an inverted yield curve. And while we're early in the game here, those inverted yield curves have predicted recessions. We want to watch and see, is the 1 year going to pay more than the 10-year Treasury bond sometime over the next year? Most importantly, is the 3-month, that's what the Federal Reserve officials watch, is the 3-month Treasury bill going to pay more than 10 years, the 10-year bond? If that inversion happens across the 2, the 1, and the 3-month, then we're looking at potential recession. They have been very accurate predictors of recession previously. So that's going to shift the landscape for both stocks and bonds, and we'll be watching that carefully as we go forward.
All right. Kind of a scary time, I guess, out there.
It is.
Always good to see you.
You too.
Especially in person, living color. All right. Let's check the weather forecast.